Hi, everybody. It's Jason Grill, host of the Grill Nation Show. You're listening on radio. If you're joining us on radio to KMBZ 980 AM. If you're joining us on podcast, we are all over the place. Google Podcasts, Apple, Spotify, Stitcher. Or if you're watching us live right now on my social media, we greatly appreciate it. Also, you can connect with us on our website, grillnationshow.com. We are going to have an awesome show today. So much information to get to. I'm very excited to welcome back Logan Freeman. He's the co-founder and a principal at FTW Investments. For purposes of today, the website is ftwinvestmentsllc.com and then in backspace Grill Nation. Welcome back to the show, Logan. How are you, my friend?
Thanks for having me once again, Jason. We're doing fantastic. And just trying to battle some of these crazy weather scenarios that we're going through right now. But, all is when you think about the seasons, everything seems to be like going exactly like it should be. It's springtime. Things are definitely blossoming here for FTW Investments for Kansas City. And it was just kind of a little blimp in the road here with the snow that came down here today. But it'll be all gone tomorrow, and we'll be back at it. So doing fantastic, man. Just really enjoying continuing to grow our business here in Kansas City.
So yeah, I completely agree with you. Snow is different when it's when you know it's going to be 75 and 80 on the weekend. It looks pretty, man. It doesn't stick to the roads. It's not bad. It's not bad. Logan, you've been on the show before. You join us every other month. Today we're going to talk about kind of looking back at the last 12 months.
Yep.
And looking forward. For our listeners, real quickly that haven't heard you before, tell us about what your company does, so we can start and set the table there.
Yeah, so FTW Investments is a privately held real estate equity company based out of Kansas City, Missouri, and our whole mission and our main goal is to allow access to commercial and multifamily investment opportunities where investors do not have to manage the toilets, the tenants, and the trash. We do all of that. You come in as a private or a passive investor, and we handle all of the hassle. You get all the benefits. So that's what we're doing. We're mostly focused on the multifamily and workforce housing aspect here in Kansas City, but we're looking to grow that footprint here very soon.
That's awesome. We're going to talk more about that and how you've done that over the last year. Sure. On the website, and again, if you're listening to the show, it's ftwinvestmentsllc.com/Grill Nation. If someone goes to that website, what happens? What do they get? I know there's some really cool investment type information that you have on there.
Well, when you hear these words, syndication, private real estate equity, you hear all these types of terminologies and words that you might not hear on a regular basis. The questions I get quite often are, hey, what is that? What does that mean to me? What's the structure like? What can I expect from a return standpoint? And so we put together a passive investing roadmap that simply allows investors that are interested in understanding the mechanics and the structure of these type of investments. And we break that out in about 20 pages on an ebook that we have there. So if you go and put your email address in, I will be contacting you, by the way. But you'll also be getting a great resource that our team put together that helps really break this down in more detail.
That's awesome. Yeah, and I've actually enjoyed being on your email. You guys send out some really good updates and do some webinars, and kind of for someone who's kind of a novice like myself, it's great to learn about kind of other things happening as far as investments you can be a part of in Kansas City.
Absolutely.
And I want to talk about that. I know this was one of our topics for the last segment, but let's break into that now. You've been really really strong of kind of sharing what you're doing, getting kind of the message out there, sharing really good tidbits of information with people that actually are great takeaways and helpful. And you've done that through, the social media, podcasting, webinars you do with your co-founders. Talk to us about that, because I feel like what you do is just, and it's all free. It's not like you're charging people. So I really enjoy that. And that I feel like you've ramped up in this last year.
Yeah, well, so on that front, one of my top talents is learner, but it's also input. So I have those two top talents if we were talking about strength finders. So it's in my nature. I have to give back, and I have to be able to tell people what I'm learning. It's kind of my chemistry. It's in my DNA, so to speak. And so what I found was a really nice sweet spot where all of the research and all of the books and all of the information that I'm taking in, I can then filter it through my business partners. We actually create a narrative that is attractive, but it's also backed in empirical evidence, and we're able to share that. And what we learned along that process was that folks really get to know you as an individual. And the mechanism that you're investing through is a commercial real estate offering. Well, who's to say what's different than commercial real estate here in Kansas City than it is in St. Louis? Sure, there's macroeconomic trends that we have to look at, but when we get down to the nuts and bolts of it, it's bricks and mortar. And so what stands out is kind of that human element, that human capital. And that's what we like to focus on. And we like to really build relationships through education, because we learn just as much as our investors do from us on a regular basis. And giving back in that opportunity has been a great way to actually build those relationships with investors and bidders.
Yeah, I like that. Again, FTW Investments LLC.com/Grill Nation. Logan Freeman is joining me again, co-founder and principal. Let's talk about today's show. We have a couple of minutes left in this first segment. We are going to talk a lot about when we were kind of talking about what the show would be about. It felt appropriate to kind of look back at the last year. Now that we have been people are being vaccinated, we've been through this last year, kind of what your goals were and what you accomplished, but also trying to help people that are listening, kind of looking forward into the future. What's going to be important to investors? What are you focused on? And kind of breaking through some of the success stories that you worked on in 2020 and early 2021, and where things are going for your company and for the investors in 2021 moving forward.
Yeah, so I think that two items that we need to cover in this kind of call or this show today is around interest rates and consumer sentiment. And so those are two things that we're tracking very, very closely because they affect our business. And so we head to the Federal Reserve, and it left its benchmark interest rate unchanged at nearly zero. And so that has a really strong implications for the commercial real estate market. We can dive into that as well today, but also is the consumer sentiment and where the M2 money supply is, meaning people are saving a lot of money. And so there could be a lot of pent up demand that creates a lot of economic activity here going into the future. So those are two things that we've been doing a lot of research on. People need to keep their eyes on, and I think are going to be really important when we're talking about investments.
Great information. Logan Freeman, co-founder and principal of FTW Investments, is our guest today on the Grill Nation show. As always, you can connect with me on social media at Jason Grill on Twitter, at Grill Nation Show. Also on Facebook, Instagram, and LinkedIn at Jason Grill. Logan's website, again, is FTWinvestmentsLLC.com. If you add a /Grill Nation to that, they have all kinds of great information and ways that you can learn, and a lot of free guides you can download as well to start you in this journey of investing and learn more about Logan and his business. You're listening to the Grill Nation show here on 980 AM KMBZ on podcast, on our website, grillnationshow.com. And thanks to all those for joining us on the live stream today that are watching. We greatly appreciate it. We greatly appreciate all the comments and support as well. And we're looking forward to a great show today. We'll be right back after the break with more Grill Nation. Thanks for joining us today.
Starting off strong.
Great first segment. Now that as we record this, we can keep talking. I kind of like the back and forth in the break for the social media watchers. I kind of want to start. We're going to start with the look back, right?
Yeah.
Okay. That'll be exciting. No, I really enjoyed watching the webinar in preparation for the show. You guys are working on so many projects. It's kind of unbelievable. And we'll get into some of those, but
sure.
It's growing, man. You are growing.
Yeah, well, we are growing in the unit count, but also the employee count. We're up to 7 now, Jason, since the last time we spoke. So we brought on 3 full-time employees the last 2 months. So the company's definitely growing, and that creates a lot of opportunity, but a lot of I will call anxiety as well, because we got people to take care of. So, but it's definitely needed, and it's the right thing to do.
I love it. And you guys, you're on the streetcar, the expansion of the streetcar. I noticed the new office.
Yes, we're super excited about that
You got
project.
to get through the growing pains for a while, with all the construction. But once that's over, it'll be nice.
Yeah, and it's going to be stopping right in front of our new office building, so we're stoked about that.
Sweet, love it. Next segment will be 11 minutes and 40 seconds,
Okay.
and as soon as Darren gives us the go ahead on the taping, we will begin. And he is ready to roll. He's rolling, and in 3, 2, 1. Welcome back, everybody, to the Grill Nation show here on KMBZ 980 AM on podcast networks and on our website, grillnationshow.com. And I appreciate those joining us on Facebook, LinkedIn, or Twitter. I'm your host, Jason Grill. Appreciate you joining us each and every week. And I also appreciate those who have reached out about being on the show and contributing to the show and collaborating. We've had some really great, successful shows recently, and people are pretty stoked and sharing it throughout the web. So we appreciate that, because our goal here is to connect you to some leaders in Kansas City and their great businesses. So on that note, today's show, we're joined by Logan Freeman, who is the co-founder and principal at FTW Investments, LLC.com is their website, FTW Investments, LLC.com. If you want to download their free passive investor guide, you can go to ftwinvestmentsllc.com/Grill Nation. Logan, welcome back. We're going to begin kind of looking back at the last 12 months. This is a look back and a look forward show. So let's just start off kind of like at the beginning of 2020, pre-COVID. You guys were really kind of bullish on a retail renaissance. Where is that now? And, you think it'll be stronger post-COVID? What are your thoughts on that?
Yeah, that's a great question. And the story goes back to us actually being in Silicon Valley in January. We had some speaking engagements where we were going out to Apple, Amazon, and eBay and talking about how to invest out of state effectively. And then we went down to a real estate conference where this was a very big topic, was this retail renaissance. And, frankly, we had close to about $20 million worth of neighborhood retail shopping centers under contract at that time. And, we got back from that trip and ran into, COVID-19, obviously. And we dropped every single one of those transactions only because, the uncertainty where this thing was going to go. And so, frankly, we have doubled down on the affordable housing or the workforce housing kind of market instead of getting back into the neighborhood retail shopping centers. But the reason we were focused on it was we saw a nice, cash flowing asset with strong tenant base, which, has held up pretty well during COVID. But it also was pricing at a time where, multifamily was continuing to be more competitive. And so the yields on these projects were very strong if you can mitigate for the risk. Now, with pricing into COVID-19 and the uncertainty, we did not see pricing change on a lot of these assets. And so for that reason, we decided to shift our focus to multifamily housing sector and not so much on the retail side of things. And we have not seen the prices drop to a point where we feel we can price in that uncertainty into that asset class. So I do think that it's still a great asset class. We transact quite a few of these on the brokerage side of the business, but frankly, for us, the uncertainty still going forward on these projects, we have not seen the pricing arbitrage to go in and really get the pricing that we really want. So we're keeping a really close eye on it. We've looked at quite a few of the projects in Kansas City recently, but we're just seeing better, above market risk adjusted returns in the multifamily side than we are in triple net lease retail right now.
And you decided to focus more on workforce housing, affordable, attainable housing in 2020 and now. Why did you make that decision instead of kind of focusing on more of the luxury multifamily?
Well, I think that the big thesis is that, during a recession or an economic downturn, it's a lot easier for folks to come up with $700 per month for rent than it is for $1,400 or $2,000 for rent. And so for us, that was one big reason, was the affordability of these rents. So we know that there's a large market or target market for these types of product. That was one. The second being the new deliveries. Jason, I'm sure you've heard that Cordish is working on 3 Light and the Midland, and those are all Class A, close to 450 new apartments, all Class A. And we continue to see Millhouse and Mac and some other new developers, Lux Living, come into Kansas City and focus on that Class A. And so it's not really our forte to do new ground up development in that sector, and it's not affordable, or affordable from the sense of affordable to almost every other person out there. And so that reason was really paramount. And then the third reason is rising construction costs. The projects that we purchase are anywhere between $35,000 per door all the way up to $65,000 per door. To build that new product would be close to $200,000 per door, land and construction costs, if not, even more rising now with construction costs and labor and materials. And so we saw a really great market for this affordable type of apartment complexes that you can't build anymore. And so it fit our value add strategy, and we really poured a lot of time, effort, and energy into acquiring those types of assets.
Sounds like a smart investment, and I'm sure your investors like that. I couldn't agree more. More different types of housing is needed right now more than ever throughout not only Kansas City, Missouri, but also throughout our region. And it's constantly changing. And I think you guys are being very smart about it, and that's bright. And then you mentioned the 3 Light project. I mean, they had to go through multiple years of work with city council, to try to provide an affordable housing component of that, which is the Midland part combined with the 3 Light part. So, and I would say this, like when you do drive around the crossroads in downtown and, different areas of Kansas City, there is a lot of new housing. I mean, it is still being built. And I know that that's exciting to see the city kind of growing and kind of continuing to evolve. Logan Freeman is our guest. He is with FTW Investments, co-founder and principal at the firm. Great company here in Kansas City. You talked about the $700 price point for most of your properties. We don't need to go into all of your acquisitions in the last year under management, but if you want to just kind of talk to us about some raw numbers and maybe some of the highlights that you're really excited about that FTW Investments is engaged in this last year, please do.
Yeah, so we did about 10 projects last year, which was quite a bit, especially when a lot of folks were sitting on the sidelines and implementing a kind of wait and see strategy. We felt like, and one person that we're very, I think, influenced by is Warren Buffett, and Buffett is always talking about zigging when everybody else is zagging. And so while we saw everybody else kind of sitting on the sidelines, here in Kansas City, we saw an opportunity to go purchase assets at some sort of a discount. And everybody kept talking about the COVID discount. I'm waiting for this COVID discount. Well, there is no COVID discount anymore. And when it was here, the folks who wanted to take action on that did. But there was a very few, I think, players in Kansas City that actually did. So one of the assets or projects that we purchased was out in Independence, Missouri. It was 426 units of this, what we'll call workforce housing. It was comprised of 3 different projects, the Hudson, Meadowbrook, and Winter Place. And, this was a really large asset for us at the time. We had done, 35 units, 45 units, 12 units, 26 units, but nothing of the magnitude of 426. So it really stretched us, mentally, I would say, from the standpoint of, hey, if we're going to do larger projects, we need to scale our actual business operations up. And so we started to do that. We started to think about that a lot. But, Independence is a great submarket of Kansas City where a lot of folks are living for affordability. They have decent schools over there. It's like 3 or 4 high schools in Independence. And so there's better parts than others. But we saw the opportunity where a private equity firm had basically run their business plan on this asset class. And so they were on the tail end of their 5-year hold period. They had achieved their returns for their investors, and they needed to move this project. And so, frankly, we didn't see the competition that we thought we were going to because of COVID, which allowed us to get into this on a price per door standpoint, 5,000 or 6,000 below market, which, across 426 units is a big number. And so that gave us a big opportunity to scale up our operations, but also gave us a really strong foothold, not only in Kansas City, but in the independent submarket. We continue to bolster on a few more acquisitions there late last year as well.
Yeah, you guys have done a lot, and on one of your webinars, you went through all of these and how they actually helped your investors, and it's pretty interesting stuff. One question I do have is, how do you work with an appraiser on evaluation?
So when we're working with appraisers, there's 4 asset classes that we'll talk about. There's core plus, value add, and opportunistic. FTW really focuses on value add and opportunistic projects. The core and core plus will be class A, class B type of product. And our investors are striving for a little more value. We are always saying that, we're modeling Howard Marks and Charlie Munger and utilizing the value investor type of framework, using that lattice work to allow us to go create a margin of safety. And so when we're working with appraisers on a value add project, you have to look forward, right? So you have to look forward at what the property can be. And you have to tell a very compelling story to get the valuation that you need from a construction standpoint. So basically, we will go get, financing, to purchase the asset, but then there'll be a construction component on top of that. And the appraised value has to be as complete. And so it's as complete. So when the stabilization happens, what's the value of that? And the bank will give us financing based on that appraised value. And when you are doing off-market opportunities that haven't traded at that level in a marketplace, you have to show very, very strong evidence on why the value is what it is. And so we're very in tune with the way that appraisers are working, and we know a lot of the appraisers. And Corey on our team, who hopefully you guys will get to meet at some point this year.
We'll get him on at some point.
Yeah, he runs point on working with all of our appraisers and really telling that story. And so we utilize a lot of different resources. Obviously, there's a pro forma. There's an offering memorandum, but then we also utilize video, and we tell stories, and we get into the nuts and bolts of these transactions. And we also show a strong track record and then market evidence that where we believe the market's going to go. And when you have a foothold in the submarkets that we do here in Kansas City, you can start to make that case very, very strong with those appraisers.
Logan Freeman is our guest from FTW Investments. We'll be right back after the break. Thanks for joining us today on the Grill Nation Show. Okay, Logan, while we're waiting for this to be taped, let's just talk, because we got our next segment we're going to look forward. I would like to start out with some of the challenges that maybe you've grown through in 2020, 2021, but briefly on that, and then we'll kind of go in through the next year of opportunities. I want to talk about interest rates, like you said, and inflation, correct?
Sure, absolutely.
Okay. Got it. Okay, he says he's ready. Wow, kick it. Okay, let's do it. Flying today. In 3, 2, 1. Welcome back to the Grill Nation Show. I'm your host, Jason Grill. If you're listening on radio, we greatly appreciate it. 9:80 a.m. on podcasts. Thank you for listening, or on our website, grillnationshow.com. Or if you're watching us live, thank you for watching us today on a snowy day here in Kansas City. Spring snowy day, but it'll be 75 by Saturday, so we're good to go. Logan Freeman, again, is our guest. FTW Investments, LLC.com. Great company here in Kansas City, growing rapidly, helping investors all over the map. Very excited to have him back. They collaborate with the show every other month. The website where you can get more information about what they do and download some really great information for free is FTWinvestmentsLLC.com/Grill Nation. I really appreciate all those who have engaged with the show, other guests, and sharing on social, but also I'm hearing some great success stories from charities we've had on, or companies we've had on, connecting with new people through the Grill Nation Show network. So we're excited about that. Logan, we were looking back over the last 12 months, and briefly, we talked about, how many total units you had acquired for under investment this last year. We talked about kind of the price point. We've talked about kind of some of the other details. What were some of the challenges in 2020 and early 2021? And then I want to hop really quickly back into what's next, what's the future look like, and some of those topics. So just quickly, just talk about some of the challenges.
Yeah. So with any growing business, you're going to have challenges, right? And especially when you grow from a company with 37 units to a company with over 900 units in less than 12 months. And so, frankly, we went from three guys doing some projects together to needing to have a director of administration, a director of operations, an acquisition associate, a full-time bookkeeper, a financial controller, investor relations person, a marketing team. So I think that what happened when we think about the entrepreneurial's roller coaster, you go from this kind of dip to having hockey stick growth, hopefully. And when you do, there's steps along that process that can be either skipped over or missed. And so, frankly, from an operational standpoint, in FTW Investments, one quote that we really love to talk through is, where focus goes, energy flows. And so we were focused so much on acquisitions, and we had to take a step back at the end of last year and say, we got to really focus on our operations to make sure that we implement the business plans, but also we can continue to grow at a certain scale. And so, that's been a big focus for us. It was a challenge just because going out and finding the right people to build your team is difficult. Going through that as entrepreneurs ourselves was definitely difficult. So a lot of growth there. You have to be what Ray Dalio calls radically transparent, and you have to be ruthless with the with the self-evaluation. And so thankfully, my business partners and myself took a lot of time to think about that and to put a lot of time, effort, and energy and dollars between doing it the right way. So that was one main challenge, I think, was just the growth of the business, happening so fast, and then having to take a step back and not focus on acquisitions as much, but really, hone in on the operations piece. And so, the big challenge right now, obviously, is continuing to find these types of opportunities. Like I mentioned earlier, we're not really seeing COVID-19 pricing anymore. And so then it becomes a velocity game. You have to figure out what properties are you looking to go after, what's being marketed, listed right now, and making sure we're getting offers in on everything as well. The other challenge I'll say from the last 12 months was a financing standpoint. I thought that equity was going to be, maybe a little bit of a challenge, but I think where the stock market is, price to earnings ratios being at an all-time high, and folks are not understanding why it continues to go up. They're looking for an alternative. So the equity necessarily wasn't an issue for us, but finding good debt instruments for these projects was. You have to be a very strong borrower from that standpoint. There were reserves that Fannie Mae and Freddie Mac were requiring us to hold back, which we had to price into the deals. And so I think those were some of the challenges, but we have a great team, robust team with different talents that allowed us to work through each one of those.
Yeah, and I think one thing is when you scale up, you do have more opportunities for the investors, and more opportunities will come through that pipeline. Whenever I email a fellow entrepreneur or CEO, and I reach out to them to connect them to someone, it's kind of cool when they get to the point where they're like, "Hey, Jason," or "Hey, Grill, we have a COO now, and I'm the founder, but I've kind of handed off those duties to a COO or an operations person, which
absolutely
makes me feel like they've done the right thing in their growth pattern." So,
yeah.
So Logan Freeman is with us. Logan, okay, let's look forward. We look back. What are some of the opportunities you see in the upcoming year? You talked about inflation rates and interest rates, and inflation kind of maybe having an impact, but kind of take us through some advantages and some opportunities you see, and maybe some specific corridors you're targeting in Kansas City. I had heard that the historic Northeast was mentioned on one of your webinars, but kind of take us through some of the opportunities and some of the impacts, and maybe some of the corridors that you'll focus on.
Yeah, and so I think that understanding, in our investors' minds, interest rates and inflation are always top of mind. And so, I just finished up reading Howard Marks. He runs Oak Tree Financial, his kind of last newsletter, and it was very, very informational. And what I would say on that front is that I don't think interest rates are necessarily going to jump through the roof in the next couple of years, especially with where Jerome Powell has said that he wants to keep inflation and is fine running inflation a little higher to catch up from the last 5 to 10 years that we have never hit our 2% ratio and metric that we've been looking for. So, I think that debt's going to be continually cheap. The big opportunity is to really find those opportunities in those value add investments. And so the market areas that we're kind of farming right now is twofold. The first being when we close a transaction in a submarket. So we're getting ready to do our first project over in Wyandotte County in Kansas City, Kansas. That closes next week. It's a 48-unit apartment complex. We're heavily focused on reaching out to all property owners in a 3.5 to 5 mile radius to say, hey, we're interested in growing our footprint here in this submarket. If you would like to have a conversation about that, let's do that. So we're focused on Wyandotte County. We're focused on the historic Northeast, which we've completed multiple transactions there in the last 6 months. And then also, Independence is always going to be a farm area for us. I think very quickly we're going to be the largest property owner on multifamily housing over in Independence. So we got to, kind of diversify a little bit from not, owning everything over in Independence. But maybe there's some benefits to that.
I like that you're diversifying.
Yeah, maybe there's some benefits to that, right? Understanding where the market's at. But the other areas that we're highly focused on is Raytown and Grandview as well. So southern Jackson County. And still those kind of areas where you can jump on a major highway and get downtown or get back over to eastern Jackson County where you're working that have really great schools as well. I mean, as you know this, Kansas City proper's school district is not one of the better ones in the state, maybe not one of the better ones in the country. And so a lot of people, when they start to have school-aged children, they start to look for alternatives. And so those suburban markets like Raytown, like Independence, like Grandview, Lee Summit, Blue Springs, those are all great areas that we like to focus on from a lighter value add opportunity. But the historic Northeast is near and dear to our hearts. We think it's going to be kind of the next area that sees a lot of money. It's already seen quite a bit of growth in that area, a lot of new developments going on over there, but it's so close to downtown. There's a lot of talks of the Kauffman Stadium potentially going over to the East Village. And so that's very close to the historic Northeast. And then, frankly, just serving that population is very, very important to us. As you know, Parker and I both sit on the board of directors at a nonprofit here called Restart, and we're working with them on a number of initiatives to continue to provide affordable housing for people.
Yeah, it's a great organization. I just was on a call today with a city council person in a group that I'm engaged with as a client, and we were talking about the United Ways, the restarts, they're so important right now as far as funding for rent and for tenants and for housing providers. So it's an evolving issue. Logan Freeman is with us. Couple of minutes left in the segment. We have so many questions. We'll get into some of these other issues. Logan's going to join us again in a couple months. Are there any other things that you wanted to talk about for investors or things they should be thinking about? I know in your webinar series you talked a lot about the stimulus, the spending, evaluations, debts, cap rates, dispositions. What else should people be thinking about as we look forward the next 12 months?
I mean, I think people should be thinking about control, Jason, and being able to diversify their portfolio in regards to getting exposure to a tangible asset class is crucial. There's so much competition for home buying, and the cost of new homes has skyrocketed due to construction costs. I think there's going to be a long-term need for rental housing in the United States. And so make decisions based on the economic data that's available to you and long-term trends that were showing up before COVID, but maybe COVID just exacerbated them a little bit farther. Not ones that have just popped up recently. It might change whenever we get back to our normal or new normal kind of operating. That's what I would leave folks with on that front.
Mm-hmm. And what are your top goals for 2021 in the last minute of this segment? Just talk about a few of them for the company and for yourself.
Yeah, I mean, it's very highly focused on new acquisitions. We have a $100 million goal to acquire $100 million worth of real estate in Kansas City this year. And we're tracking right about 23 million right now, which is fantastic. But a lot of those were developed in December of last year. And so the growth of our team, our director of operations, our acquisitions associate, and onboarding them into the FTW culture is a huge goal for us. And then we're bolstering on so much new technology in relation to property management software and CRMs and marketing automation that all of those things are going to help us continue to apply leverage to our business.
We lost you there for a second, Logan, through Wi-Fi, but we'll clean that up after the show. Just for another 30 seconds, talk to us about those top goals again.
So our top goal is to continue to focus on acquisitions. We're targeting $100 million worth of acquisitions this year. The second main goal is continuing to onboard our new employees at FTW into the culture of FTW. And the last goal there, I think, is applying leverage through technology. So bringing on new property management software, bringing on software in relation to CoStar and Yardi, and being able to understand the market even better is very, very important. Integrating those into our business operations on a regular basis is top of mind.
Logan Freeman is joining us, FTW Investments. Their website is ftwinvestmentsllc.com. We'll be back on the Grill Nation show for our last segment, the best for last segment here after the break. Thanks for joining us today, either on radio, podcasts, on our website, or on our live stream. We greatly appreciate it. I'll be right back. Darren will clean that up. We lost your Wi-Fi for a second, but
okay. It
was only for about 20 seconds, so that's why I asked you to do that again. That was a great answer. Very, very good. Very good. So we've made it through almost a full show without any Wi-Fi problems at 10:30 in the morning or whatever.
Yeah. Well, this morning when I got up at 10:30 in the morning.
One thing too I want to mention is that your investor reporting and all the tools that you're giving, I think you're stepping up as well.
Yes.
Because I'm getting really good emails from you with so much information. We'll get into that in the last segment.
Okay.
As he's ready here, give me 1 second. Okay. Here we go in 3, 2, excuse me, hold second, 1 second. 3, 2, 1. Hey, everybody, and welcome back to the Grill Nation show. Best for last segment, final segment of the day. Again, we're joined by Logan Freeman with FTW Investments. Their website is ftwinvestmentsllc.com. And if you go to ftwinvestmentsllc.com/Grill Nation, they have really put together a really cool website and talking about being on the radio show and links to the show, but also a really cool free comprehensive investor guide that they can give to you that has so much information about some of the investment projects, what they're working on. Plus, they give you just so many good information via email and webinars about the current marketplace, the commercial real estate place, the multifamily space. Just a great, great asset, and it's all free. So ftwinvestmentsllc.com/Grill Nation. Logan, let's start off real briefly with your first commercial deal, which was the Hostess Brands building. Talk to us about that, because I know that's where headquarters is and kind of how that arrangement looks, and where it's at and what it all looks like.
Yeah, we're very excited about this opportunity. Frankly, when thinking about an office investment, most investors are kind of looking at us like, what do you mean you're purchasing an office building? Well, we have a business that's growing that needs office space, and it's very collaborative. And so, I know there's a lot of talk with folks doing remote work, and that's totally fine. But for our business, we're a relational type of business. And so we have a very close partnership with Clemens Real Estate here in Kansas City. Audrey and Aaron, the principals over there. We saw a great opportunity on a building that's located at 1 East Armour Boulevard. So if you're not familiar with that area, it's right where the streetcar's coming down in Midtown. And the Mac Properties company just purchased the U.S. Bank building across the street. They'll be tearing that down and building another 250 multifamily units there. But we have some other tenants there as well, which is very exciting. So we did a lease to purchase option on this project. It's about 35,000 square feet. And Herzog Construction, who's completing the streetcar engineering and the construction, is one of our main tenants. We signed a lease with a new medical office tenant, and Clemens Real Estate and FTW will be in that building as well. So I think it's positioned very well. It was built for Hostess Brands in the 90s, believe it or not. So there's still conference rooms called the Twinkie Room. And
did they leave any Twinkies lying around?
Yeah, there was no Twinkies lying around, but there was a conference room called the Twinkie Room for sure. So yeah, I think that's a great opportunity for us to bring some investors into that project that are going to look for a little bit different diversification other than the multifamily asset class. And with the streetcar, we're very excited about long-term appreciation on that building as well.
Logan, I want to ask you a question. You mentioned Gina Wickman's book, Traction. What is that all about? What is an entrepreneur operating system all about? Do you subscribe to this mentality? What should we be reading this book? What's it all about?
Yeah, this book has completely changed the way that we look at growing our business, and I continue to see and hear more and more folks, utilizing this system. But it's a book that lays out a plan, right? I mean, if you don't have a map, you can't really get to where you're going. And so it lays out a map, and then understanding, how to actually get there. So we have what's called rocks for each quarter. So sure, we have our 10-year vision, we have our 5-year goal, and we have our 3-year goal, our 1-year goal, but then we have quarterly rocks that we're working back towards. And that's all built into this EOS system, or like you mentioned, the entrepreneur operating system. So every meeting that we have every single Monday morning, we're talking about our rocks. We're talking about what we're doing, where on our calendars do the tasks that we have scheduled, line back up with those rocks. And then on a quarterly basis, we're meeting as principals, developing new rocks, looking at the actuals versus the budget and going forward. So I can't speak highly enough about that book and the way that it's changed the way that we go about running our business.
Gina Wickman's book. I'll have to look into it. I got a question for you about banking on sentiment.
Yeah.
Why shouldn't you bank on sentiment? And I believe the reason why I wanted to talk about this, because you have an example with George Brett.
Absolutely.
If you're listening, I should have put George Brett up on the screen. Maybe we'll do that, but I'll add that to this. But yeah, why is that? And give us that example of the George Brett example and why that relates to why you shouldn't bank on sentiment.
Sure. I think that intentions don't matter, actions do. And I stole that from Naval Ravikant, the CEO of Angels List. But heading into 2021, there's been two prevailing types of investors circling the market. That first category of investors is going along with the crowd, snapping up anything and everything from crypto all the way to high-risk stocks with no underlying economic justification for doing so, mostly out of a fear of missing out. And as I was reading Howard Marks' newsletter, he even mentioned the FOMO effect in the markets. And so
I feel that too, man. I've seen all the Dogecoin talk.
Yeah,
I'm like, man, I'm so over this. I've missed it. And then I see my stocks just dropping. And I'm like, man, I need to catch up with these high school kids that are now millionaires.
Right. So I'm not sure that going along with the mob is a sound investment strategy right now. Right. But especially since experts are saying that both the stock market and Bitcoin are huge bubbles, but with both predicted to potentially burst sooner rather than later. So you have one set of investors playing with fire on one side. And on the other side, you have investors who are just avoiding the market altogether. They're the ones we talked about earlier, the ones that are sitting on the sidelines, afraid to jumping back into the waters with a different kind of fear of failing. And so I recently revisited an article from The Street at the end of 2019 that read, "Market sentiment and valuation are on thin ice." Sorry. And basically the author warned of an impeding market correction because the market was in overvaluation territory. So let's talk a little bit about what that means. The S&P 500 price to earnings ratio at the time was 18.9. The historical average is 16. So fast forward today, where the S&P 500 ratio is currently trading around 25, I believe, near the same levels at the height of the dot-com bubble. And so based on those numbers, the stock market is clearly, trading on sentiment as prices don't reflect underlying economic reality. And the whole thought process was, let's tell a story about, a garage sale and a baseball that, frankly was quote unquote hit by George Brett. It was his second home run, and that somebody caught at Kauffman's, Stadium or wherever they were playing at the time. I imagine it was maybe, I don't know, you probably know, but I don't know if they were playing there or somewhere else. But long story short, he had $1,000, price tag on this baseball, which was just like this old, baseball that, had no validation around it. And so to him, it was worth so much more than it was somebody else. Now, if it was a rookie card signed by George Brett, I think that it would be a little bit different and have a little bit of a different valuation. But as you see with GameStop, as you see with what's going on with Robinhood, the sentiment continues to drive prices up. and it's not backed by really anything other than this herd mentality of folks doing that. And so I think that's where I was at when I was writing that article, was mostly talking about, you can't make investment decisions based on sentiment. You want to make investment decisions based on economic data and tangible real estates, and rely on history that allows you to make really great choices.
As a former athlete, you had me at that one. That was easy to understand. And another bonus of being on your email list, you get cool things like that.
Yep.
Logan Freeman is our guest. We've got a minute left, Logan. Last question I have for you is, how many sides to a coin are there really?
So you always hear about heads and tails, but you never hear about the edge. And so for us, there's three sides to the coin. You've got your heads, you've got your tails, which are pretty cut and dry, but then there's always the edge where you can be looking at one side, acting on the other, and understanding that each side has its pros and its cons. And so I always just urge folks to be open to everything, but attached to nothing. And so whenever you see a lot of folks doing one thing, make sure that you understand that, people are moving because other people are moving. And when you decide to make a choice or a decision, look at both sides and then use your own rational decision-making, which we like to call mental models, to actually make those decisions. So we like to say there's three sides, and that's a Robert Kiyosaki quote that, we obviously really love to implement into our business.
That's why we love having Logan Freeman on the Grill Nation show, and he always comes with some great takeaways and some great comments and quotes. And I love getting your emails because you do so much reading and knowledge. It's just it's fun to read, and it makes me really kind of more energetic about this whole investor world. Logan Freeman, FTW Investments.com, LLC.com, FTW Investments, LLC.com is their website. He is the co-founder and principal. If you want to download a free package or get more information, you can go to ftwinvestmentsllc.com/Grill Nation. Tons of great information in there. Logan is a collaborator and contributor to the Grill Nation show. We'll see him again in a couple months. Logan, I appreciate your time today. Congrats on all your guys' growth and success. And thank you for just, always just bringing the knowledge and some really great information to the listeners each and every week.
Now, the pleasure is all mine. Thank you for having us again, Jason.
Thank you so much. And thank you to the listeners for joining us again on the Grill Nation show. As always, connect with me on social media. Just search for Jason Grill. And if you have any great guest ideas or collaborators, please just reach out to us on social media or via email. Hope you've enjoyed the show today. Have a great weekend, and we will talk to you soon. Take care. Okay, Logan. Great job, my friend. We're still live. Darren will be saving our podcast and our radio show here, but we're going to tape our sneak peek segment.
Yeah.
What is the key thing that you wanted to focus on out of the show? I really kind of like looking forward. So if we can boil down a 2-minute question essentially to what are some things that we should be thinking about as investors over the next 12 months? If you could do that, that'd be great, because then you can share that on your social and your personal social, and I think that that'll generate a lot of interest. Does that make sense?
Yeah, you bet.
Okay. So I'll ask that question. Let me bring it up here on here real quick. I thought that was a great answer. Okay. And we'll begin here, and it's a 2-minute taping. And 3, 2, 1. Hello, this is Jason Grill, host of the Grill Nation show. I'm with Logan Freeman. He is the co-founder and principal of FTW Investments. Their website is ftwinvestmentsllc.com. Logan, our one question sneak peek, what should investors be thinking about over the next 12 months?
So I thought a lot about this, and I knew you were going to ask me this question. And so we always like to go back to the 5 commandments of business. And I'm an acronym guy. So we'll call this the CENTS, CENTS. For an investment, for a great business to be truly profitable, you have to be thinking through control, a high barrier of entry, a need, the ability to step away from your time, and to be able to scale it. And so those 5 things, control, high barrier of entry, need, time, and scale, need to be right at the forefront for folks as they're looking, forward the next 12 months. And so for us, it's really important to think about the control piece. We want control. We want to be able to control our investments, our investors' dollars through forced appreciation in the tangible asset class. High barrier of entry. Not everybody can just go purchase a 426 unit apartment complex. And so you need to have a high barrier of entry where you get above market risk adjusted returns, because not everybody has access or has the ability to do those things. So those are the 2 that I wanted to highlight.
I love that. Logan is going to be a great guest this week. He's a great collaborator with the show. The website, again, FTW Investments, LLC.com/Grill Nation. They have a free comprehensive investor guide there that you can get. Very cool. Logan Freeman, thanks for joining us on this one question sneak peek. Again, this week, he is going to be dropping a whole heck of a lot of knowledge about what they're working on, their growth in investing, and some of the factors that you really need to be considering as we move forward in 2021. Thanks for watching this Grill Nation show, one question sneak peek. Okay, hold on one second, Logan. I'm going to end the broadcast, but don't leave me.
All right.